We continue to monitor the commodity markets, and I'm delighted to welcome David Jones from IG Group to discuss gold. David, the gold price hasn't recovered since that sharp decline in August and September. Is it because investors are now favouring the US dollar as the safe haven of choice?
I think in recent weeks there maybe has been a shift that way towards the US dollar. We saw in September, a relatively big collapse of the price of gold, dropping around about $300. I think people did think it had got somewhat ahead of itself in the summer, the price of gold. But I don't think that's really going to change its medium-term safe haven status, even though it's maybe fallen slightly out of favour in the last couple of months. I think it's still definitely a safe haven of choice for people.
Why haven't we seen it regain more of those losses since the downturn? What are investors waiting for?
I think really, with the European debt crisis, that's been one of the main drivers in recent months, and I think that maybe some concerns have abated recently that we are going to get hopefully a solution to this in the nenext few weeks, or at least some firm plans on the table. So that's maybe taken away some of the momentum from the price of gold. However, if you look at it, over just the last 3 years, we've got a steady uptrend from about $700 an ounce to currently just above $1,600 an ounce. So I think now the price has cooled off, we may well see some cautious buying towards the year end.
Going forward, what do you expect in terms of volatility? We
saw massive volatility in August and September. We've seen the price of gold travel through almost a $400 range, so around about 20% range in August, September. It's gone really quiet in October so far, and again, at the moment, I don't see a return to enormous volatility. So much of this, though, across all markets hinges on what happens in Europe. I think if we get some further surprise there, we'll see volatility pick up, but at the moment, it has just sort of gone back to being a fairly calm market day to day.
Let's talk about some projections now. What are your forecasts for the end of the year and for 2012?
I think at the moment it wouldn't be surprising to see it end up roughly where we are now. So I think for example, for October, we've traded between $1,600 and $1,700 an ounce. So I think at the end of the year, if we saw it around about $1,700, that wouldn't be too surprising. Next year, I do think with the European problem likely to be hanging over us, and the fact that global economies will continue to stutter, I think gold will remain attractive. So it wouldn't be surprising for me to see it push out to fresh all-time highs again yet next year, somewhere up above or around $2,000 an ounce maybe by the end of next year isn't completely out of the question.
David Jones speaking to me there from London. We'll be bringing you the reaction and interviews from the Geneva Forex event over the coming days. But for now, goodbye.